Hi everyone, I want to talk about the right mentality and the mindset to sell options successfully. And this will be strictly from the perspective of a neutral option seller. So I only ever sell strangles on commodities, and I'll go over my strategy at the end of the video if some people are new to this channel. But overall, I just sell options on or strangles on futures, specifically commodities. I don't really trade the ES or the Nasdaq or anything of that sort. So, this is really an overlooked topic, but I think it's really important, and I think this is part of why I'm able to still be in the game. And as of right now, for the year, we're up about I'm up about 10% on my portfolio. When the S&P is down, I think 5 or 6%. And as of right now, I don't have any positions on, and I think this is part of why I'm still in the game. So let's talk about it. So what is the right mentality? Well, the Vikings were very, very successful in battle, and this is mainly because they followed a core principle, one core principle. They fought only if they knew the odds were clearly in their favor. Right. So what is your main job as a trader, which is pretty much the same thing as the Vikings, is to trade only when you know the odds are clearly in your favor. Now, obviously, this is way easier said than done, but again, from my perspective, I'm a neutral trader. So for me, it's really simple. I need a somewhat of a certain market, somewhat of some kind of certainty where we don't have any crazy events, anything crazy going on with the commodities, no tariffs, which we will get to in a second. And if I want to elaborate more, basically my job as a neutral options trader is to enter the market when it's relatively calm and stay away from the market if I anticipate the odds might not be in my favor in the near future. And an example of something that can worsen my odds is geopolitical tensions, tariffs, and market uncertainty. So this is, I think, somewhat basic, and maybe other people maybe sell calls and sell puts and might be a bit more directional than I am. But for me, I'm only neutral. Really, it's the only thing that kind of makes sense to me. And the only thing that I've had success with over the past 8.5, almost 9 years. And this is also a big reason why I don't sell courses or anything. Actually, I'm making a course for this channel for free, obviously on YouTube. But this is really, I think, one of the main points, which I knew when not to trade or when to stay away from the market. And as a neutral trader, it's pretty somewhat simple. So this is the academy where basically people, for the most part, just mirror my trades. But at the same time, this is how they learn because there's no better way to learn than doing this, and there's no upfront cost for the academy. So feel free to email me in my email address below if you want to join. But basically, I've done this here so far 1, 2, 3, 4, 5, only 5 trades, and this is March right now, March 2025, and I don't have any trades open. And if you followed what's going on right now, it's basically we have a bunch of tariffs from the US and then counter tariffs on the US and back and forth, so on and so forth. So things are crazy. So the precious metals, which is basically gold and silver, gold is definitely very directional. So basically from the end of January, the price just kind of became very directional. It's all-time high right now. And I knew that obviously when Trump will get into office, and then with the rate cuts, and people expect some rate cuts, gold will probably be very volatile. So I knew, I'm not going to touch gold because this is really an unstable time. And obviously Trump is going to get into office and do a bunch of crazy stuff, which obviously he's doing right now. All right. So this is kind of my thought process for gold. And I want to go over each and every commodity because I think it's really important to understand why I trade or not trade that specific commodity. So this is pretty simple for gold. At that point, so over here, so these lines are the stop losses. Over here, this is where I check to open a potential position. Now, the range is really good for the stop losses. These are not the strikes. These are the stop losses. And the range was pretty good. But at the same time, I knew it's 10 days away at that point from Trump getting into office. And there is a possibility that things will go crazy. I don't know for sure, but I'm always I better be safe than sorry with the market. This is something I've learned a long time ago. So if there's something that might create uncertainty, I'm gonna be out, especially with gold. Sometimes some years gold is really nice and in direction and neutral. For now, that's not the case. Now for copper, it's also a trade that I didn't want to open basically for the most part, because China, they are the biggest copper consumer in the world, and the biggest single copper consumer in the world. And obviously, again, Trump put some tariffs on them, on China, and I don't really know how it's going to affect the metals or China's ability to buy copper. Is the demand going to go down? Supply will go up. I'm not sure exactly. All I know is it's probably going to create some volatility short term. So, which is exactly what happened. So for January it was pretty good, but then February, once we got some tariffs, the price reacted to the tariffs, and since February I haven't traded copper. Actually, even in January I haven't traded copper, even though there was a good trade there. I didn't take it. I should have taken it. Regardless, this is why I'm not touching copper right now, because there's still basically a tariff war going on between the US and China, and because China is the biggest single consumer of copper in the world, then I expect some volatility, right? Or there's a possibility of some volatility. I don't know how much. All I know is, obviously, this is not the ideal market conditions for me as a neutral seller. Let's go to silver. So silver has been actually pretty good. I traded it all the way up until the end of March. And then, again, I decided to close the position. The main reason is because the tariffs from the US on Mexico. And Mexico is the single biggest producer and exporter of silver in the world. So you can imagine it's going to be a pretty big deal for the commodity price. Now, overall, it's been pretty stable, I want to say, but I don't know what's going to happen. Maybe in a few days, it's going to, the price will keep exploding up and up. I have a position open on demo, which is down like 20% right now, I think. But this is why I did not want to open a position at the beginning of this month of March, just because I don't know what's going to happen. Now, I had a position in February. I opened it on February 3rd, and this is when Trump postponed the tariffs on Mexico up until March. So I felt okay to open a position because as of that moment, we had no tariffs on silver. And the position went perfectly fine, almost a full profit target. Actually, no, I closed it before the profit target because Trump announced that he will, in fact, put the tariffs back on Mexico in March. So for now, no trade from either. Now, crude oil. I was in a position on crude oil, actually, and I also closed it right at the end of February. Main reason is, again, crude oil is, even though it is a commodity, it also somewhat of like it reacts to geopolitical tension, so on and so forth. And also in April, OPEC, they announced that in April they will probably increase the supply of oil, which will obviously cause the price to go down. If the supply goes up and the demand stays the same, then the price of oil will sharply go down. And again, this is not only like what I suspect. This is literally what I just read in the news here. So if you go to the news tab for crude oil, I just go over every single thing, and and just gonna see what's going on. So there's a bunch of stuff also with the sanctions on Russia, and the peace between Russia and Ukraine, so on and so forth. But overall, Trump is in office. Bottom line. And things are happening. Things are happening for the commodities. Prices for now are going up and down. I suspect things will stabilize pretty quickly because nobody likes when commodities are too volatile. It's really not good for anyone. Really, nobody benefits from it for the most part. And this is why I don't want to trade crude oil for now, at least up until April, because like I said, in April, OPEC, they announced that they will increase their production of oil, but we don't really know that, up until like their actual confirmation. they might actually not do it. But for now, there's a possibility of things going crazy. And also, I'm sure you've seen that the stock market is just plummeting down, really starting at the end of February, right? So it's plummeting down. It went down by quite a bit, I think, from the peak and up until now. 8.5%? That's quite a bit. And whether you like it or not, if such a sharp decline can definitely create some tension for commodities like crude oil, gold, and silver. Copper, not as much, because gold and silver are more of like precious metals, and crude oil, even though it's a very useful commodity, not exactly like gold is, but gold, I guess gold is not as useful. Sorry, it's still a measure of how the economy is doing for crude oil. So this is why I don't want to trade the crude oil at the moment. Now, natural gas. I never ever traded during winter time, and winter is just about to be over with, but I never really touch it because natural gas is used in heating in Europe and North America, and the price it's always going crazy during winter time, because the demand usually goes up, or depending if it's a cold winter. This winter was really cold, so the price really went up quite a bit. Previous winter, price I believe so went down quite a bit, from here. So from November, it just went down all the way to February. So we'll see what's going to happen. Usually summertime is really a good time for natural gas. You can see the price just kind of goes sideways for the most part. But again, for now, we have a pretty cold winter, and we are still in winter technically. So I don't want to trade natural gas. Now the grains are overall okay. Now there are some sanctions some tariffs on Canada and Mexico, obviously, and they both export grains into the US. And the US farmers also announced that they will plant more corn and wheat. And actually, I'm not sure about the soybeans products, but corn and wheat will be more planting in the US just because of the tariffs. So the supply within the US will go up, and this is really why the price went down here. And again, this is not me speculating. This is literally following the news, following everything that's going on. So I also exited this position at the end of the month for a bit of profit, and for now I really don't want to touch it. And for all the grains, it's starting April, usually April, May, depending on a year. This is the harvesting and planting season, which there's always volatility during this season. So you can see the previous year started exactly at the middle, towards the end of April. Actually, I don't remember if this was something else. I don't remember if something happened here between Russia and Ukraine. But overall, there's always volatility. If you look at the volatility for it, there's always volatility for the grains between April and June, July-ish. So I never really trade them during this time of the year, and just wait for more favorable conditions. So this is why I'm not trading anything right now, because we don't have any favorable conditions in terms of, we do expect things to just kind of move around up and down and be more volatile than usual just because of what's going on. But things tend to come down pretty quickly and usually stay pretty calm for quite some time. So for now, this is what it is. Gotta take whatever you can as a trader, and this is basically what I think is really important for people to understand, that you don't really need to trade every month and all the time. It's you trade whenever you have a good opportunity and the market conditions are in your favor, or the odds are really in your favor. Now, this is my strategy for those who who are not following the video. So I basically 95 or even 99% of the time I sell short strangles. I try to stay at 45 days or less, but it depends on the position and the time. Sometimes I can go to 100 days to 60 days to expiration. Depends. These are technically all the products that I trade. For now, I'm really not trading any of the currency futures and none of the meats. They're just too crazy. For the short strikes, I stayed around delta 20, 21, 22 for the short strangles. And for the calls and puts, delta 35-ish. But again, I usually only do short strangles. profit target is 50% of credit. Loss target is, a max of 50% of credit. So I risk one to make one at worst. And so my stop loss is dynamic. So as the position is getting better and better, I'm obviously going to lower and lower my stop loss. I think it's really important, and I have a video on that in my channel if you want to go take a look at that. And I always use CVOL for good entry. So this is the commodity volatility index. Basically tells us if the options are overpriced or not. If they are overpriced, obviously I'm trying to open a position, or relatively overpriced, because I can sell the options for more expensive. And then when the volatility goes down, I will be making money along with theta decay. Now, I only exit positions if my targets are hit at 21 days to expiration. If we get to the point, we usually never get to the point, but just to avoid gamma risk, I can adjust the position if needed. Pretty much never happens. Sometimes it does, like really rarely it does. Maybe happen twice, 3 times in many years. And I can exit early if there's something, like some unexpected event, like geopolitical tensions, tariffs, for example, I would exit early. And the most important thing is I'm always looking for a good opportunity where the risk is worth the reward. So this is kind of summarizes the video, where I always want to look for positions where the risk is worth the reward, or in other words, where the odds are clearly in my favor. So again, thank you so much for watching, and I hope you guys are having a pretty good month, and I'm sure we're gonna have a pretty good year. Thank you again, and I'll catch you in the next one.